inventories across the board are in line. So you're not seeing this excess of supply over demand. So prices are being held. We're seeing much less promotion at the high end than you saw in previous years.
I think retailers are going to have to work harder. They're going to have to innovate constantly, and those who do are going to win. I think the customer rewards newness and innovation.
It's going to be about access and differentiation, because what we're all looking for is a greater share of wallet, because we don't see that ceiling going up so aggressively.
Well, that was Saks CEO Stephen Sadove, Rue La La CEO Ben Fishman, and HSN's Mindy Grossman yesterday, speaking with my colleagues Carol Master and Matt Miller about the U.S. retail market. For more on the American consumer, we're joined now by Bloomberg contributing editor Jay Margolis, a former top executive at Tommy Hilfiger and Reebok, and currently on the board of Godiva and Boston Beer. Jay, good to see you.
Good to see you.
Most important, did you drop those chocolates on my desk or not?
They are there. You have your holiday treats.
Just kidding. All right. So what they were talking about in those little sound bites that we heard, innovation and inventory, the two big areas for them, right?
Well, here's a great panel, because Steve Sadoff has done a wonderful job of turning Saks around after a tough time after the crash. Mindy has built a wonder. She comes out of Nike and Ralph Lauren, and has built a wonderful thing with home shopping in terms of newness, exclusivity, brands that have gone on there and get their own presence. And Ben, who's online auction business, I think all of them are talking about newness and flow and having to differentiate themselves, and price value is an important part of the panel discussion.
Right.
And that's one that everybody works on.
But you're saying that last week was actually not a good week for retailers.
So the beauty of retail is it could be a day after an interview, but last week was not good. November was terrific. Traffic was up. Black Friday was great. From then on, it's been kind of slow. And last week, it just seems that it was off a lot, which if you go look for 40% off signs in stores like Abercrombie & Fitch or Ann Taylor, it's not usual that they would go discounting the entire store at this point.
This early on? This
early on. And it's an indication that as the sales slow up, they're going to have to move. And that, obviously is concerned about inventory levels going into, after Christmas.
Right.
But it's not great out there right now. So
but why is that? What happened between November and then now?
Traffic was up. There was demand. I think people went shopping. Black Friday has become a fun thing. We've discussed this together over time. It's almost I'm going out with friends. I'm buying for myself. Christmas gift giving shorter, closer, tighter frame. The next 5 days, every day is a month in terms of retail. 45% of the year's business will be done from November through Christmas. It's a big hit.
But does that mean that some of the retailers who thought they'd be in the black then may not be as far into the black as they thought they were?
I think everybody was trending in a way where December looked really good. Inventory levels had built up for December. Okay. And the consumer now has to show up. So
we're going to see big discounts coming into the first quarter then?
I think you're seeing them right now.
Seeing them now, starting now.
Yeah.
Okay. For next year, what's your biggest worry?
I was asked the question. I tried, I was going to prepare for it and think about, what retailers would win and what retailers would lose. And what I really got down to was China. I think cost of goods, the more people I talk to, and I've been spending a lot of time in the market talking to both retail, wholesale people, labor is moving away from our form of manufacturing, going into tech and other things, or the domestic market. The domestic Chinese market is heated up to the point where they need to keep goods there versus exporting. I think there's I hear 30 to 40% increases in labor costs on top of raw material costs. If you're a brand and you don't have a brand that has elasticity in terms of price, if there's a threshold price, opening low prices, that jump from $9.99 to $11 is a big jump for many consumers.
Jump.
It's a huge jump. And I think we're going to start seeing that.
Who would that be? Who would be the brands that couldn't absorb that cost?
Well, I started thinking, and it would obviously be more commodity brands obviously that are only manufacturing goods in China. I thought of Old Navy, I thought of Gap. If they're not going to upgrade and move forward and not just be price driven by the consumer, I thought of possibly a Payless shoe or people like that. I think Aeropostale and stores that have this, they've built a really, really good business, but at a tight window in terms of what price they sell to the consumer. And they have American Eagle and Abercrombie and other competitors squeezing them.
So these clothing retailers then that are going to be
I think so.
squeezed.
But I have to believe it affects toys. I have to believe it affects outerwear. I have to believe it's China. And China can't be moved to Indonesia, Vietnam. They're so big in terms of how much they manufacture
But does it mean that the Walmarts, for instance, though, can absorb it better?
I don't think so. I think Target, Walmart, if you dug down to that level, they're going to see price increases. And getting the goods is a real key too. So inventory levels that sometimes are held to fill in against, you're holding something that's possibly lower margin, possibly higher cost, not a good formula. So my fear, I'm not this is just a thought with you. That would be my big concern going into next year. I have to get my brand stronger to withstand price increases.
But a very informed fear. Thank you, Jay.
Thank you.
Have
Always
a good holiday.
Happy holiday, Betty.
Jay Margolis, the Bloomberg contributing editor.